Let's talk about money. Not your money, the bank's money. Hey YouTube, this is LaShawn Wiley with the Science of Managing. In today's episode, I am going to give you guys some basic information that you will need to feel a lot more comfortable when you walk into a bank and you ask for a loan. Now, I know for some people who have never done this before, this can be very nerve-wracking, intimidating, especially when you're sitting across from a loan officer and they seem to have all the answers, and you just basically need a loan and you're not really sure how to ask for it. So it could be a little intimidating. For those who don't know me, I am currently an active banker with a current NMLS number for loan origination. I primarily focus on lines of credit and on secured loans and unsecured loans. I also do referrals for mortgages, so I help people get things that they need in line in order to purchase their first home, or not just their first home, but just a home in general. So there are some things you are going to want to know before you even walk into the bank. And I am going to give you three categories to kind of go over with yourself before you walk into the bank and ask for a loan. All right. So the first one is the amount that you're going to ask for. You need to know how much you're going to ask for. And most banks have different fancy names for different programs that they have, different loans that they have. But most banks will have a floor of how small they will allow a loan to even be set up for. Otherwise, it wouldn't be worth it for them. And normally, the smallest amount is around $1,500 to $2,000. So if you need less than $1,500 or $2,000, whatever their floor is, maybe a loan from the bank is not what you need. Maybe you need something else. The other thing to think about when we're talking about the amount is keep in mind your income that you're making from your job will affect how much they'll even think about agreeing to give you. Because if you ask for more than what you can afford to pay back, they're not going to want to approve that loan. So make sure you're asking for a reasonable amount of money. Also, keep in mind it's not just based on how much money you make, it's also based on how much debt you have. If your debt to income is too high, that will be another reason for them to deny you for the loan. So look up in YouTube, different YouTube videos that they have out there on DTI and how to calculate your own DTI. It's not that hard. But just know if you have a lot of debt going out, meaning you have a lot of car notes, you have a lot of credit card debt, you have a high rent that you're paying or mortgage that you're paying, and you're not making a lot more money than the average person out there, that can affect how much they will allow you to borrow. Okay, so that's the amount. The second thing you want to think about is the term of the loan. And lenders, when they say term, they're simply saying how long you want the loan for. So normally lenders speak, when they speak term, they're thinking months. They speak months. So they'll say 12 months or 24 months, 36 months. They don't necessarily say 1 year, 2 years, or 3 years. And just because I'm saying 1, 2, and 3 years doesn't mean you can't get a loan for a year and a half, because you can. So you can say my term that I'm looking to have this loan for is 18 months. You can say that. Here's a couple of things to keep in mind when you're speaking about term. The longer you go out with the loan, the harder it is for the bank to say yes, because you're basically on the hook for a longer period of time paying them back. So you have to have pretty solid credit to show that you can go for a longer term without defaulting or missing a payment, that you're that stable, that your job is that secure that you can go a longer period of time. So just so you know, for an underwriter, and when I say underwriter, these are the people in the little back rooms off site that basically stamps the loan as approved or declined. If the term is shorter, it's easier for the underwriter to say, okay, well, we're only on the hook for 24 months. So that's only 2 years. Let's go ahead and approve this loan, because this guy or this gal should be able to pay this back in the 2 years. Okay. They've been at their job for 5 years. What's another 2 years? So kind of keep that in mind, because if you're asking for a loan for 60 months, which is 5 years, it might be harder for them to say, well, this person's been on their job for 3 years and they're looking to go 5 years on this loan, longer than they even had their current job. So do we want to take that risk with this person? So you got to think like an underwriter. Okay. Also, the last thing about term is the longer you go with your term, the smaller your monthly payments will be. So for you, a longer term might be attractive, but a shorter term might be more attractive to the underwriter. So you have to strike that balance between the two worlds. Okay. Okay, so number three is credit. Let's talk a little bit about credit and what you need to know before walking into the bank when it comes to your own credit. You need to know what your credit score is. If you don't know what your credit score is, then the banker is basically going to have to run your credit, and you could be taking a hard hit on your credit for no reason at all, especially if your credit is already in trouble. Use Credit Karma to find out what your credit score is, because Credit Karma is actually what's called a soft hit. It's not a hard hit on your credit. So it's not going to pull your score down. Now, here's something to think about though. Credit Karma and the way banks calculate your score may be a little bit different. They're more than likely they're going to be different to where you might see a 40 to, I've seen as high as 80-point swing between the differences on the two platforms. So kind of keep that in mind. And it's not always worse or better. It can go either way. Now, when it comes to credit, you also want to make sure that you have a high enough score to qualify for a loan. So if your score is below 660, there's a real good chance that you will not be able to get the loan. Most banks are looking for a 660 and above. Some banks are looking for 680 and above. And that kind of depends also on the term and the amount of money that you're looking to borrow. So if you have a lower credit score, you need to keep the term kind of short and the amount reasonably low. But if you have a high credit score, and when I say high, I'm talking about a 760 and above or a 750 and above. If you're working with a 750 and above, then you can start going for those longer terms and you can go for the larger amounts. Okay. So know what your credit score is. Make sure you don't have anything in collections. Make sure you're not already overextended with debt and how many loans you already have, whether it's a car loan, a mortgage, a credit card, and now you're looking for a personal loan. If you're carrying a lot of debt, that can hurt your chances. Okay. Hey, so if you guys have any questions about any of the information that I gave you, please leave a comment. Ask your questions. I'll be more than happy to answer your questions, and hopefully you're able to get some information that's going to be useful when you walk into that bank and you feel better. And if you did get some useful information, go ahead and hit that like button and go ahead and subscribe to the channel if this is the kind of information that you like to get. So you guys be good out there, succeed in life, no excuses. And until next time, I'll see you guys later.